Thank you very much for coming to today's program test fair. I'm a professor in the FinTech program. This is my name. So today I would like to provide you with an introduction to financial technology, or simply FinTech. So I'm going to explain to you what is financial technology. I will, provide you with several examples. And we discuss some applications. And then I will provide an introduction to the FinTech program offered by CUHK. Okay, so the first part is about what is FinTech, and then the second part is about this FinTech program at CUHK. In case you have any questions, please feel free to type them in the chat room. Okay, you can type them at any time. So after I finish, we'll also do a Q&A session. You can also unmute yourself and ask your questions. All right, so I guess everybody knows what FinTech refers to. Okay, FinTech refers to financial technology. It is about using new technology to innovate financial services. Okay, so here I list some very common FinTech applications. The first one is Epayments, the online borrowing and lending, virtual banks, robo-advisors, and cryptocurrencies. Okay, so I'm going to walk you through these 5 applications. Of course, our time is limited. I cannot really go into details of each one. Telling you the, explaining to you the technology behind them. I mean, it's very hard to do that within a very short period of time. But I will explain to you what these applications are about and why FinTech might be important. Okay, so let's first look at e-payments. I'm pretty sure many of you have used these services before, like Alipay, WeChat Pay, or PayMe. And if you have an iPhone, you could also use Apple Pay. If you're using Samsung, you can use Samsung Pay, so there are all kinds of so-called e-payments services offered by different offered from different sources. Okay, so let me just use Apple Pay as an example. If you have an iPhone, there is a wallet app on your phone, and then you can include your credit cards into the e-wallets. Okay, and then when you go shopping, you just need to place your phone near some kind of reader, and then the transaction will be done. Okay, so basically, when you use Apple Pay, there is a technology that is called NFC, near field communication. Near field communication. You have to place the phone close enough to that machine. Okay, if it's too far away, of course, it won't work. But once it's close enough, it works. Okay, so this basically works through this technology called near field communication. Some people may argue, I'm used to using a real credit card all the time. I mean, I carry my card all the time. What's the big deal about using things like Apple Pay, right? So I mean, for some people, they would argue, this is not that convenient. They would argue basically using the traditional card is already very convenient. What's the big deal about this one? Okay. Well, the real convenience comes in when you think about bad things. Okay, when bad things happen, you find out that this one is really, really useful. For example, in a pandemic, we don't want to get infected, right? So we prefer contactless ways to make payments. You don't really want to hand in your credit cards to someone else who might be infected. Okay. So basically, these e-payments provide us with contactless ways to make payments. Okay, so this will reduce the chance of getting infected. This is one good thing about it. And another thing is think about what happens when you lose your card, right? You carry your card around. I mean, there's always some chance that you lose your card. This happens all the time. And when you lose your card, of course, you have to call the bank to cancel the card. You have to cancel it. Otherwise, some other people pick up your card and then they could be able to use it. So you have to cancel your card, and that of course brings you trouble. Okay, and then the bank has to issue you a new card. But with Apple Pay, you don't need to cancel your card. Let's say you lose your. So first of all, you don't need to carry your card anymore. You just, when you go out shopping, you just carry your phone, right? What if you lose your phone? Well, when you lose your phone, you don't have to cancel your credit card, because the credit card details are not really stored on your phone. Okay, even somebody pick up your phone and they cannot really access the credit card details on your phone. So there's really no need to cancel your credit card and apply for a new one. Okay, so you see that it's convenient. Okay, and also it will reduce the chance of credit card fraud. I mean, this also happens often. Credit card fraud. That means someone else uses your cards without authorization. Okay, I mean, this happened to me at least 3 times. So once I returned from a conference in the US, somebody used my card. I figured out that it could be that when I was in the US, when I ate at the restaurant, I paid by credit card, and then basically the waiter took away your cards to settle the payments. They took away your card and swipe it at their counter to settle the payments. Okay, and then they brought back you the card. Okay, and I mean they could basically copy your credit card information. I mean, and sold that to somebody else. They could do that. Okay, but with Apple Pay, I mean, there's no chance that they could take away your cards and then copy your card information. So in the US, when you shopping, when you go shopping online, actually there's no need to enter anything like one-time password. So it's not like Hong Kong. Okay. So in Hong Kong, when you use a credit card to shop online, I mean, for most credit cards, issuers, they're going to send you a one-time password, and you have to enter that password to validate the transaction. But in US, actually, once they have the card, they have the card number, the name of the card holder, and then also the PIN on the back of the card, then they can use it online. Okay, so yeah, so basically you see that. If you use like e-wallets, okay, it will significantly reduce the chance of credit card fraud. Okay, so to summarize a little bit, I think in general, e-payments make our life more convenient and secure. Okay, so I use Apple Pay as an example. I mean, if you use Alipay or WeChat Pay, I mean, you probably have the same benefits. Okay, now let's look at the second application, which is about online borrowing and lending. First of all, many banks, they offer online applications for loans. Okay, so let's say you want to borrow money from a bank. You can easily go to their websites and apply online. Okay, this could be a credit card application, or it could be an application for a specific type of loan. For example, like now we're in a tax season. Some people don't have enough money to pay for their taxes, so they actually take out a loan, a personal loan from the bank to pay for their taxes. Okay? There are all kinds of loans, and you can easily file an application online. Okay, so most banks offer this kind of online services, and they're convenient, of course. But the point about online borrowing and lending is not really about this. Okay, most banks can offer you online services. However, the success rate is not high. Okay, so you can go on, just go to their website and file your application, but there's no guarantee that they will approve it. Okay, the chance of failure is actually pretty high, especially for individuals with low income or no established credit history. And the same applies to those so-called micro and small businesses. Okay, so these very small companies, they also want to borrow money to finance their business, and it's also very hard for them to borrow money from the conventional banks. So although there exists this kind of online services for loan applications, the success rate from these traditional lenders or conventional lenders is low. Okay, and the reason is there exists the so-called asymmetry of information. Okay, so there is a term in economics which describes this phenomenon. Right, I type it in the chat room. Okay. So what does this mean? It means that basically the banks do not really know or do not really have a lot of information, enough information about these loan applicants. Okay? Without sufficient information, they cannot really assess how good this applicant is. Right. So obviously, banks are concerned about the ability of the borrower to repay the money in the future, right? If they think your default probability is high, default means you don't repay, okay? If they think the default probability is high, then obviously they're not going to approve your application. They're not going to lend you any money, okay? So for these conventional lenders like banks, they don't really have sufficient information about these low-income individuals or those individuals without credit history. And also, they don't have enough information about these so-called MSEs, micro and small enterprises. Okay? Without enough information, they are not willing to lend out any money. So then, some companies, but mainly most of them are technology companies, came into this borrowing and lending business. Okay, so for example, like Alibaba established a company called Ant Financial. Okay, so this is basically under Alibaba. This is a company under Alibaba that provides all kinds of financial services. One of their main services is about lending. Okay, it's about lending. So Ant Financial is willing to lend to individuals with low income and also to those MSEs. Okay? And the reason is that why they dare make such a decision. I mean, it's not because they don't care about default probability. They care about it so much. Okay. But why they dare to lend to those people and the conventional banks don't? The reason is, or I should say the big difference is, the Ant Financial possesses massive amount of data about these individuals and also those MSEs. Okay, they have data about them. They have information about them. So many people on mainland China, they use Taobao for shopping. Okay, so even if that person is like a low-income person, doesn't really have a lot of money, but you can access his purchase records from Taobao. Okay, and also many people use Alipay to settle their payments, so you can access their payment records from Alipay. Okay, Taobao, Alipay, they're all owned by Alibaba. So Ant Financial naturally has access to all these types of data. Okay, so they can utilize this big data in order to forecast the default probability of an individual. This cannot be done by conventional banks because they don't have such kind of data. They have the model, but they don't have the data. Okay, the important thing here is the data. Okay, Ant Financial has this type of data, so that they can use machine learning models to make a pretty accurate forecast. And the same applies to those MSEs. So many of these small businesses actually, they have online stores in Taobao, so they sell things in Taobao. So Ant Financial has access to their operational data from their online stores. Okay, and this is sufficient for them to analyze the credit risk or the default probability of these MSEs. All right, so this is the second application. This is about online borrowing and lending. Of course, this is very important to the economy, right? So actually, most of these businesses in the economy are small ones. Okay, I mean, of course, in reality, you hear those big names, right? But actually, the backbone of any economy is the small ones. If the small ones cannot survive, you won't have a flourishing economy. Okay, so if you want the economy to perform well, you need to let those small ones to thrive. And a key factor for their survival and growth is this is how easily they can access funding. Okay, how easily they can access funding. Okay, so if they cannot borrow anymore, I mean, most of those small businesses won't survive. So you can see the the important role played by these fintech companies here in the economy. And then I will talk about virtual banks. Yeah, so far in Hong Kong, we have 8 virtual banks, and I'm pretty sure there will be more. So you probably have seen these names, and some of you may even have used their services. Okay, I haven't used any of them yet. I mean, I saw a lot of promotion last year when these virtual banks opened. So they offer lots of promotional offers, like when you open an account with them, they are going to pay you at interest rates much higher than conventional banks. Okay, so what is the real benefit? Okay, so besides these promotional offers, I mean, obviously these promotional offers cannot really last long. Okay, so they can pay you a higher interest rate for the deposits, but only for like several months. They cannot pay that to you forever. So what is the real benefits of these virtual banks? So virtual means no physical locations. They don't have any physical branches. Of course, they will have an office to house some of their staff, but they don't have any physical branches. So it's not like the conventional banking. Let's say you want to do something with Hang Seng Bank or HSBC. You go to a branch of that bank, right? And then you you talk to the staff there. Okay. But now everything is done without going to any physical location. So everything is done online, basically. Everything is done online. And doing things online actually can save you a lot of cost. So it's actually expensive. It's actually expensive to operate a bank in physical locations. Typically, the operation cost for small branch is on the orders of millions of Hong Kong dollars. Okay, I heard it from a FinTech professor, Professor C.K. Chen. So he joined us from HSBC, and so he had some data about at least about HSBC. Okay, to operate a branch in Hong Kong is on the order of the cost is on the order of millions each year. Okay, so if you just you can save one physical location, you can save millions of Hong Kong dollars. Okay, so these virtual banks, they can save a lot of operational costs, and therefore they can charge lower fees to their customers. Okay, so as a customer, you you get the same service, but at a lower cost. And also they could offer better loan rates. Okay, so this is because of this much lower operational cost. And there's another benefits, which again is about big data and and how to utilize it to better serve customers. Okay, so so these online banks, they actually they have lots of data. I mean, some of these online banks are actually joint ventures. I don't know which one. One of them is actually partially owned by Tencent. Maybe I think it's about this WeLab. And then this Ant Bank is partially owned by Ant Financial. Okay. And then there's also one partially owned by Jingdong Financial. Okay. So Tencent, Alibaba, and Jingdong, these are the three tech giants in China. Okay. So these tech companies, they can provide lots of data to these banks. Okay. So once you have data, you can do a lot of things. You can better understand your customers. The conventional banks are limited by data. They don't have that much data. Okay, they cannot really offer customized service. Okay, so there's this concept of so-called customer centric banking. Customer centric banking. That means banking should be centered around customers' needs. Okay, the conventional banks in the past, they talk about the so-called process-centric banking. Okay, process-centric banking. So that means they don't really factor in the customer's real needs. Okay. So with these virtual banks, with the power of big data and artificial intelligence, we hope that they could serve customers' needs much better. All right. So this is about the virtual banks, and then I will talk about robo-advisors. Okay, so this is about financial advising. Okay, I'm not sure if you have used any of those financial services before. Banks they offer financial advising service. You can go to a bank, just go to their branch and say, I want to open an investment account. Okay, and when you deposit enough money there, their staff would be interested in talking to you. They are going to, promote some of their investment products to you. Okay, so yeah, you could get financial advices from traditional banks. That's definitely possible. But the threshold is high. Okay, if you just go there, you say, oh, I only have like several thousand Hong Kong dollars, and nobody cares about you. Okay, they're not going to waste their time on you. Okay, if you only have like several thousand. But if you say you open an investment account with tens of thousands, then of course they will be very interested to talking to you. But I can also tell you, not every financial advisor in a bank actually knows about those investment products. I had a very terrible experience. I won't share the name of the bank, but when I talked to their financial advisor there, they try to sell me some highly risky investments based on derivatives. Okay, I'm a professor in financial engineering and FinTech. I know all those things about derivatives. That's one of my major research area. I published papers on that. I know all kinds of stuff about derivatives. But I pretended that I didn't know anything. I asked them to explain, and I found out like that guy, okay, that banker who tried to sell me derivatives actually understood very little about derivatives, and some of his understanding was totally wrong. He couldn't really, he was wrong person actually to sell that stuff. Okay, so he didn't understand it. So when you go to a bank and if some financial advisors talk to you, I hope you stay alert. You stay alert. Don't trust anything. I'm not saying don't trust anything, okay? But you have to stay alert. Some of those things they said are definitely wrong. Okay? So be aware of that. Okay, robo-advisors are not human advisors. Okay, so they are some kind of apps. You download the app on your phone or to your computer, and then you open an account with them. And then the app will ask you questions to understand your investment needs, like what is your investment goal, what is your investment horizon, like what is your tolerance about risk, things like that, any specific requirements. For example, some investors, they say, okay, I will stay away from those very risky stocks, things like that. Okay, so you can just tell them your needs, and then the robo-advisor will try to recommend to you financial assets. Okay, and they do this, basically based on data analytics. Okay, they have data from financial markets, and they can use those data to together with your investments requirements to recommend something to you. Okay, and the thing they recommend, basically satisfies your requirements. The investment threshold with a robo-advisor is typically low. If you only have like several $100 or like several thousands dollars, and you can, Hong Kong dollars, okay, you can still open an account. There's no really like a very high investment threshold. So this is not like the conventional banking. Okay, they really require you to have put down sufficient money there in order to serve you. All right, so here I offer you 3 funds, okay, and I charted the performance of these 3 funds over I think this is about 10 years, okay, about 10 years. Okay, so there's this red one that you can see which grows very steadily over time. Okay, so its value has never dropped. So by the way, let me explain. So the starting value is 1,000. Okay, I normalized the starting value to 1,000, and you can see the value of your investment grows steadily over time. It never dips, never goes down. Okay, and then there's this blue fund. So you can see fluctuations. The overall trend is still going up, but then there are some downturns, like these down periods where you can your investment actually goes down below 1,000. And then there's this orange fund, also starts at 1,000 initially, and it also grows over time, but the rate of growth is very small. Okay, you can see growth, but it's growing slowly. Okay. All right. So I will ask you a question on some server which we call uReply. Okay. So let me share that screen with you. All right, so this is something that is used as CUHK for interaction between professors and students. So I hope you can participate. You can just scan this QR code and then input this session number. If you have a phone, you can just open your phone and use a scanner to scan this QR code, and then you will be led to your browser. Okay, so this some page will open in your browser, and you can access the question. In case you forget about this this chart, here are the three funds. All right, in the interest of time, let's check the results. Thank you for your participation. We can see actually 72% now has chosen A, which is the red fund. And this percentage has gone up to 75%. And then only like 15% chose B, and then 7% chose C, okay? Well, okay, so yeah, from this survey, I can understand why most of you chose A. I mean, this looks like really the best one. Because this is the fund value actually grows steadily over time, and it is growing at a fast pace. So it seems like this is really the best one. Okay. But unfortunately, if you invest in the red one, you are going to lose all your money, because this red one is a fraud. This one is a fraud. Okay. I'm not sure if you have any of you have heard of the things like Ponzi scheme. Ponzi scheme. Ponzi scheme. If you don't, you can go and search for it online later. Okay. So I don't have time to explain it in detail, but this is basically a financial fraud. The scheme organizer basically attracts investments to this fund by promising very high return, but then of course the organizer has no capability to earn that investment return in the financial markets. So how is he going to pay off the high return? Well, he's going to just bring in new investors, actually much more new investors into the scheme, and use their money to pay off the old investors. This is called the Ponzi scheme. Ponzi scheme. Okay, so I can tell you, financial investments, real financial investments will never show you a curve like this red one. Okay, you will never see a red curve in financial markets. You will never see a curve in financial markets like this red one. Okay, this one is not real. Okay, this is from a fraud. Okay, in financial markets, if you want to have high return, there's also high risk. Okay, so risk is always associated with return. If you want to earn a high return, you must also face higher risk. Okay, you can compare the blue one and the orange one. On average, the blue one offers you a much higher return than the orange one per year. But then, of course, there's a lot of risk associated with this blue one. The orange one is much less risky. Okay? So don't forget that. Okay, in financial markets, higher return is always accompanied by higher risk. Okay, so from this survey, I see that not many of you really know financial markets. I mean, that's fine, because you guys have never learned anything about financial markets. Okay, to an individual who wants to invest in financial markets, they have to be really careful. Okay, otherwise they could be easily trapped in a fraud, like the red one. Okay, it can be easily trapped. Okay. Of course, if you use a robo-advisory service, they are not going to recommend anything like the red one to you. They are going to screen out the red ones in the first place, because they know such kind of things are not real. Okay? Okay, so the last application is about cryptocurrencies. I bet you have heard about Bitcoin. I can show you a price chart for Bitcoin. The price is quoted in US dollars, and of course you can just multiply it by 7.8 to convert the price into Hong Kong dollars. So yeah, I think I started in 2013 or 2014. At that time, Bitcoin price is quite low. But then you can see over this 10 years period, its prices has gone up dramatically. Okay, dramatically. But at the same time, you also see very volatile behavior. Okay, so that the price is actually very, very volatile for Bitcoin. There are many other crypto assets. Bitcoin is just one of them, and the first one. All cryptocurrencies are built based on a technology called blockchain. Okay? Here, I don't have time to explain the detail of a blockchain, but basically, it's a distributed ledger. Okay, a ledger is like a book that keeps all kinds of records. Okay. A distributed ledger means this ledger is not owned by one person or one entity. Okay, it's distributed. Okay, actually, lots of parties have access to this ledger. So in the classical financial system, all the transactions are settled by central authorities. Okay, so there is a central authority that handles all kinds of transactions, and that central authority is basically is serving as some kind of middleman, and then of course it will charge the participants. Okay, it will charge because it provides services. In a blockchain, there's no central authority. There's no central authority. Okay, and therefore you can get rid of that very high transaction fee. Typically, banks serve as the central authority in settling transactions. Okay, and they can really charge you a lot, especially for cross-border transactions. Within border, typically the fee is quite low, but across border, the fee could be very high. Okay, so if you let's say if you use blockchains, one advantage is lower fees. Okay, because there's no central authority. So this is how a blockchain works. Let's say you want to transfer a Bitcoin to somebody else. So this transaction will be entered into this network. It's a distributed network which consists of hundreds of thousands of computers. Okay, so this network is not owned by a single party. Okay, so it can be accessed by hundreds of thousands, many computers. That's why it's called distributed. And these computers will try to solve some cryptography problems in order to validate this transaction or verify this transaction. Okay, once the transaction is submitted, of course, it has to be verified. In the classical financial system, this transaction is verified by the central authority. But now in this distributed system, which is called blockchain, this verification is done by lots of people on the network. And once this transaction is verified by the network, it is added to a block. Okay, once a block is once a block contains enough number of transactions, it will be submitted to this blockchain. Okay, so basically a blockchain is a chain of blocks. Okay, and each block contains a certain number of transactions. By doing this in a distributed way, I already mentioned the first advantage is lower cost, and the second one is actually more security. Okay, if you have a system that is run by a central authority, it can be hacked and sometimes quite easily. So the information stored there can be breached. I mean, you often hear things about like the breaching of information from credit card companies. Okay, so their systems can be hacked, and then some information is stolen. For blockchains, they can still be hacked, but the probability is really low. Okay, it's really low. So virtually there is no risk of being hacked. And the third advantage is that a distributed system is transparent. So in a classical system, the information is only accessed by the central authority. Okay, it's not disclosed to the other ones. Okay, but in a blockchain, we have a lot of people on this network. Okay, they can go and verify this transaction, so they have access to this transaction. So the information is really transparent. By the way, the people who are working hard to verify these transactions are called miners. Okay, miners. And once you mine a transaction, you can get rewards. For Bitcoin, the reward is in Bitcoin. So, of course, a lot of people, support Bitcoin and other cryptocurrencies. Okay, they think they represent the future, and this is also one of the major reasons that the Bitcoin price has gone up a lot in the past 10 years. Okay? So if you see what happens to the money like U.S. dollars, in the past 10 years, the U.S. government rolled out like several quantitative easing programs. Quantitative easing basically means printing money. Okay, that's what it means. Okay, so a lot of U.S. dollars have been printed. So the U.S. government has flooded the markets with U.S. dollars, and that caused inflation. Okay, inflation basically makes money less valuable. Okay, it basically will make prices more expensive. Yeah, so a lot of people don't like this, right? So because the traditional money is controlled by the government, they can issue as a lot of money and then make money less valuable. Okay, and then people prefer Bitcoins. At least some of them prefer Bitcoin because the supply of Bitcoin is strictly controlled. Okay, the supply of Bitcoin is strictly controlled. The supply is growing, but it will be capped at some level. So it's not like US dollars. There's no upper bound. Okay, there's no upper bound. Of Bitcoin, there's an upper bound on its supply. So some people believe that in the long term, while US dollar depreciates, Bitcoin will not because of this limited supply. But of course, there are also many problems with cryptocurrencies. Okay, I will ask you the next question and you reply. If you haven't quit your browser, I think you can already see this question. Yeah, so here I give you three things which are potentially problems for Bitcoin. Number one is its price is too volatile. Number two, mining Bitcoin consumes too much electricity, and hence it's not environmentally friendly. Number three is that only a small number of transactions can be processed per second. Okay. Yeah. So I'm asking you which of the following things are problems of Bitcoin. Okay, in the interest of time, let's check the results. Yeah, so some students chose A, some B. So actually, for every answer, we have we have a quite significant percentage of choosing it. And the correct answer is D. Actually, all three are problems of Bitcoin. Okay, all three are problems of Bitcoin. The first one we've already seen from that chart. Okay, its price is very, very volatile. Okay, so some people tend to think of Bitcoin as money, but then because of this very huge volatility, it cannot be used as a store of value, right? So let's say you have one Bitcoin today. It's like it's worth let's say $50,000 US, but then tomorrow its value could drop like 20%. Okay, then you're going to lose 20% from that. Okay, so I mean this could happen. Like the swings, the daily swings could be huge. The volatility could be huge. So number one is definitely a big problem for Bitcoin to become real money. Okay, and then the second one, this is also very, very true. Okay, I can report to you some statistics. So according to University of Cambridge estimates, in 2019, the Bitcoin protocol used an estimated 62 terawatt hours of electricity. Okay, in case you don't have any sense of this number, we can compare it to the total amount of electricity consumed by some countries, and you can see that the aggregate consumption of electricity for Bitcoin mining actually exceeds the aggregate consumption of electricity in Switzerland and the Czech Republic. Okay, so of course these two are rather small countries, but still, this is a huge amount. Okay, and also if you look at the percentage in the total global electricity consumption, Bitcoin mining takes up about 0.28%. That's already a significant percentage. Given that the blockchain for Bitcoin only processed 120 million transactions in year 2019. Okay, if you actually process more transactions, you will even consume more electricity. Okay, so Bitcoin is definitely not environmentally friendly. Okay, it just consumes a lot of electricity. A lot of miners place their machines in places where electricity price is cheap. Okay. But still, like now, many of those electricity plants, they are coal-fired or gas-fired. It requires coal and natural gas in order to produce electricity, and definitely that's not environmentally friendly. Okay, so given the initiatives around the world to push for green agendas, I mean, if Bitcoin, cannot really cut down the consumption of electricity, well, at least it should switch to using green electricity. Okay, if it cannot improve, then there's a real danger that it won't survive in the long term. And the third one is about the slow speed of processing a transaction, and this is because unlike the classical system, the transactions are verified by a central authority. On a blockchain, the transaction have to be verified by lots of people on the network, and it takes time for them to solve that cryptography problem. Okay, it takes time. So that's why per second, there's only a very small number of transactions that can be validated. All right. So now I've completed the first part, which is an introduction to FinTech. I know I don't have much time left, so I will just provide you some quick information about the education program in FinTech offered at CUHK. Yeah, so we have been running this program for 4+ years. This is the first FinTech program in Hong Kong. And we offer this program because there's really a strong demand of FinTech talents in Hong Kong. Okay, there are lots of job opportunities, and our program also features a good balance of theory and practice. So we have one FinTech professor of practice, Professor CK Chen. As I mentioned him before, he joined us from HSBC. So before he joined us, he was the CIO, the Chief Information Officer at HSBC, overseeing the tech development. And we also have FinTech Practicum, which is a weekly seminar given by industry speaker. So our curriculum is rigorous. We offer all kinds of things in our curriculum. I mean, we provide students with very solid math foundation and also programming foundation. This is about computer programming, okay, writing computer codes, and also some computational techniques. And then we also provide students with solid training in IT infrastructure, like database, blockchain, financial infrastructure. There are specific courses on these topics. We also offer data science courses about machine learning, big data, statistics, and also some courses which we categorize as operations research. So this is about optimization, stochastic modeling, and simulation. Okay, so like optimization is like you want to maximize your return, right? As an investor, you want to achieve higher return. So can we maximize our return? Okay, so this is an optimization problem. And then we also teach students finance, economics, and law. And this is, of course, a very important part. Okay, so to summarize, we have mathematical and quantitative and technology courses. We also have courses for finance, economics, and law that provide you the essential knowledge of for FinTech. And then in the last year, we also asked students to do a year-long project, which we call final year project, so students can practice what they learn to some real-world applications. So we also talk about all kinds of financial applications in these courses, okay, like investments, pricing, risk management, and financial innovation. Okay, and then of course we also offer students lots of opportunities for internships and academic exchanges, and some of students participated in FinTech competitions and did very well. They won awards from those competitions. Okay, so our program also offers more options to students. We have a dual degree program with Peking University. So students joining this dual degree program will have 2 degrees from both from both universities in 4 years. Okay, 1 degree from one university. And then we also have this double major option in FinTech and IBBA. So this is in collaboration with the business school at CUHK. Okay? Students study in both programs as double majors for 4 years. So you will graduate with 2 majors, one in FinTech and the other in IBBA. Okay, so for the career prospects, let me just directly jump to the placement of our first batch of students. So here are some major employers. So you can see some of them are commercial banks like HSBC, Bank of China, Daishin Bank. Okay, so these are traditional commercial banks, and they are in desperate need of FinTech talents. All these conventional banks are transforming themselves. There's an initiative of Hong Kong government. By 2025, all banks in Hong Kong are FinTech. Okay, that's the plan from Hong Kong government. By 2025, all banks are FinTech. So in the future, the conventional banking probably won't exist. Okay, these conventional banks are all transforming themselves to become FinTech. And then some of students work in investment banks like Goldman Sachs. Some of them work for FinTech companies. Some of them work for asset management firms, okay? And also some work for consulting firms like Deloitte. So actually, there are many job opportunities. You don't have to limit yourself to to banks or investment banks. Right? Like some of them, if you prefer like technology companies, you could go and apply for technology companies, and also for like consulting firms. Okay, for JUPAS, let me just briefly mention the requirements. Well, you can find the requirement on our websites. I can tell you the median score if you look at the best 5 total. Okay, we look at the best 5 subjects out of all the subjects you've taken, and sum up their scores. The median admission score is about 26 or 27 over the years. And we're also taking non-JUPAS students. Okay, so I have to stop here because I'm running out of time. Thank you very much for your attention. If you have any questions, you can stay. I'm going to hang around and answer your questions. If you're interested in our program, you could visit our website. All the information I provided here, the admission requirements and the curriculum stuff, and also those dual degree programs, you can find them on our website.